You too can actually double your account when you pay attention to a trading setup. When you have a trading plan that you stick to, you can actually profit from the markets, but you have to be consistent and you have to be constant and you have to follow trading rules that you set for yourself. You know your market edge, you know what you want to trade, you know the trading setup that you want to follow. I follow this one where it says I have trend lines or I have support and resistance zones mapped out, and then I look for candlestick rejection patterns around supports, around retests to zones like that one. That's in retest to resistance zone. Well, price will play out. Price will always manipulate, but you can actually stay in the market with a stop loss, or you can stay depending on how you believe in your own setup. As I entered those trades, I knew that these candlestick rejection patterns are telling me to sell the market, and I had to stay throughout the manipulation because I knew my setup was valid. If your setup is not valid, you put a stop loss and you are cut from making losses in the market. So you only need to be consistent, but you can't just be consistent over nothing. You need a certain edge, certain trading setup that you trade. Those candlesticks were rejecting. They were rejecting a certain area, a certain zone, and that made them show that the market wants to be bearish, and I had to enter the market based on rejection patterns. And as I held on through the drawdowns, I made profits. I doubled my account. So for you to double your account, for you to profit, maybe even make $20, $100, $1,000 per day, whatever amount that is equivalent to the equity that you put in your account, you need to have a proper trading setup. You can't just trade anything that just comes, but you need to have a proper setup. A proper setup will help you stick to your trade, and it will help you position a stop loss in the most appropriate manner, and it will help you stick with the drawdown and be able to carry on trading. Despite drawdowns, you'll be able to hold the market. So what's your trading setup? Have a trading plan, journal your trades, and be able to track your trades. This way, you'll be able to see whether you're being profitable, and you'll be able to see whether you're making losses, and you'll be able to learn from your trades. So there's some psychological factors that will also come to play, even if you have a right setup. Like that setup, you can see it's a retest to a zone. I always trade this. When the market moves away from a resistance or support, it will always come back to test that certain zone. And when it comes back to test after breaking through from it, that's when you look for entries. You look for entries after the candlesticks give you rejection patterns, that dojis that have to form before you take the trade. If it still has a strong trend from the candlesticks, you don't enter, you wait until a market reversal is shown by candlesticks. Candlesticks actually give you a picture that will tell you that this move has stopped and it is about to reverse. So be able to have a trading plan and trade your setups.